Good morning, everybody. I just realized it's 9 a.m., isn't it? We should probably get this party started. How's everybody doing today? Bobby T, Joel, KR, guys, always good to see you in here. Is it just me, or do you feel like you know everybody in this class? Like it's not just a bunch of avatars and names? Good morning, Safia. I think that's one of the things. Hey, good morning, Zeba. Look at this. It feels that way, doesn't it, Joel? Pretty cool. I love this community. I love that everyone kind of comes together and everybody roots for everybody, don't they? Hey, Johan, nice to see you. Good morning, Jason. We do, don't we? My wife's getting jealous of you, Bobby T. Who is this Bobby T, huh? Guys, it's great to have you here. 10K, good to see you. Basketball game. Oh, it's March Madness, isn't it? True story, guys. I was so bad at basketball when I was a kid that I never developed an affection for it. Don't don't enjoy it. And that's okay, KR. It's different, but it's the same, isn't it? Um, and that's one thing, guys. Whether it's 7 or 8, it's different, but it's the same. Visually, it's different. The code is the same. The fibs are the same. The rules are the same. Yeah, me too, Bobby T. I'm a baseball guy. I can sit and watch baseball games all day long and love it. Even football. I enjoy football, but I won't watch it unless it's the Texans. And guys, that's pretty depressing when your team is the Texans. I do. I like to suffer. I like to suffer. Guys, welcome to Friday. What an amazing week it's been. I think you guys have done. Can I throw hey, good morning, Ed. You are. Ed, don't make it. Are you ready? Here's the process. Here's the thought. Ed, don't worry about making your goal. Worry about perfect execution. Worry about following those rules. Everything else will come out. Guys, my win percentage yesterday was absolute garbage. Garbage. But I still made money. And it's weird, and you have those days, and it really cements why you should be sticking to rules, why you should have a plan, and why you have to have trust in your plan. Um, Guys, yesterday I started with 2 losers. I was in the hole coming out of the gates, but it was okay because both of my losers followed my plan exactly. Both of my losers followed my rules. And I said, you know what? It's a cost of doing business. And if I take 100 trades, I'm going to lose 30 of them. And that's what we try to focus on today. We're going to try and focus on the method. We're going to focus on the execution. Guys, everything else works out. I hit my goal. I hit my goal for the day. The afternoon was great. And that's what we're doing, guys. We're developing trust, right? Um, who has, let's do news first, guys. Let's talk about news first because there is big news coming up. We're going to go casual Friday today. I hope that's okay with everybody. Brand new users, demos. I know I've got demos in the classroom. Do me a favor. Let me know that you're a demo. Let me know that you're here. We're going to cover everything. We're going to watch the live market. We're going to talk about rules. We're going to focus on the looks. I was making some pictures for you guys today. But before I do anything, every day when my first chart is loading, my very first chart is loading, I go to forexfactory.com, guys, and I put the link in the room for you. And I'm looking to make sure that there's not news happening. At 8:30 a.m., the core durable goods came out. It was a medium impact, had the potential to move the market, wasn't necessarily guaranteed to move the market, but I was aware just in case because it might be erratic. Here at 9:45, guys, we have flash manufacturing PMI. I'm not going to lie. I have absolutely no idea what that means. But what I do know is that the market may move crazy. It may spike and be erratic and volatile. And it's, for me personally, it's better to sit on the sidelines, to let those guys do what they're going to do, and then get back into the game once things settle down. So every morning, make it a part of your routine. Get your computer ready, and then make sure that you check that news and what's going on. And you should right now have just told Siri to set an alarm or written it down on a piece of paper. I write high impact 9:45. That's it. Hopefully I look down at the paper, but I like to know that it's there. And the guys, everything that I talk about is coming from the education page. Everything that I cover, anything that I discuss, you can find it right here in the tutorial section. And the tutorial section is really just your outline. It's your roadmap, and it's creating a foundation. And this is one of the things that I like. I was playing around with pictures today. Whoops, I think I put it in the library. This is kind of the remedial path, right? We're going to build a foundation. We're going to crawl before we do anything. Guys, this is where we're at. If you're brand new, if you're learning to read the indicators, you're right here learning to crawl, building that great foundation, understanding it. We all want to be here, right? Flying would be that successful day trader, making money every day. There's a process in between, right? Most people try to skip it. Most people try to be profitable before they build a foundation, before they get the repetition. Guys, it's that journey. It's taking those pictures, it's posting in class, it's talking out what you see, it's annotating charts. That's what gets you where you want to be. Simulating in the live market, taking pictures of everything you do, everything you see, annotating your charts of what it is. Presenting in class, getting that feedback 15 hours every week. My whole goal is to give you feedback on anything that you see, anything you do. Guys, I'm here to help you refine your entries. I'm here to help you recognize momentum. I'm here to help you understand termination conditions. And I'm here to give you feedback on your management plan as you develop it. You just have to take advantage of it. Don't skip this middle step. You can use market replay to increase the time to the end. But don't skip that middle step, guys. Embrace it a little bit. Put yourself in a position where you're like, you know what? It's okay to be new. It's okay to keep it simple. And it's really, more than anything, it's okay to make mistakes, guys, because mistakes are how you grow. The more you put that body in duress, the more it wants to grow, the better it wants to become. And in the spirit of that, whoops, the first part of this classroom, guys, is going to focus on a high probability trend trade. The first probably 30 to 45 minutes, we're going to look at a trade where every indicator on every chart agrees for the trade. All the triggers are going to be their strongest. No termination conditions exist. And of course, we're going to talk about what those look like and what they mean and what advantages they give us. And we're going to make sure that there's no trouble spots between our entry and our target. And these great entries that we're going to talk about are going to help us determine that. Your high probability trend trade, your focus on the high probability trend trade, there's a whole section dedicated to it. First 30 days and beyond, consistent winning trades. Your high probability trend trade, this first thing that we talk about, is going to give you the ability to read your charts, guys. If you've been with me any amount of time, you know that 90% of what we do is reading charts. About 10% of it is trading, right? Waiting for those advantages. Because chart reading mastery incorporates three essential elements. Understanding where the market is likely to continue. We're going to teach you how to find your entries at those continuation points. Understanding where the market is likely to go as you develop your management plan. It's going to help you with targets and understanding where the market is likely to stop. These are what we call termination conditions, areas that may stop or reverse the trend so that you know not to take that last trade into trouble. We're going to focus on these three concepts. We're going to simplify it into three rules. You're going to build an amazing foundation. You're going to build this solid platform that's going to take you to your next level trading, and it's going to teach you through reading your charts to find your comfort zone with trading, to find the plan that suits your needs. And it's going to open up the doors for medium probability trades. And these are defined when most indicators line up for a trade, however a small issue exists. In the beginning, you're going to avoid small issues because you're not going to know how to handle them. But as you grow with the software and you execute these trades, you'll take them and you'll manage them assertively. If there's trouble in your way, you might take a portion of the position off at that trouble spot, reduce risk to a zero loss level. Your ability to chart read allows you to manage these, but if you focus on that high probability trade, if you focus on that best of the best for 30 days, you're going to be able to execute those medium probability trades with confidence. But this high probability trade gives you a platform that you can grow from, something that you can utilize every day, make money, be consistent, get that dopamine kick, feel good about it while you grow with the software, while you learn to read your indicators, while you study some of those patterns and nuances. So do me a favor today, guys. I want you to keep it simple, right? I want you to focus on simplicity. Don't make this complicated, because I do my best not to. So we're going to focus on 3 rules. We're going to focus on a large chart needing strong triggers. That's rule number 1. This has to happen to look for rule number 2. Rule number 2 says termination false, room to the targets. No termination conditions. And this one has to be true to look for the third. And the third is where we're going to find that entry. We're going to use that limit order at areas. You're going to wait for the market to come back to you. 3 rules provide 3 very distinct advantages, and these advantages create a trade. A trade is momentum, a clear path, and an entry area. And when you have these 3 working together, you're able to take that high probability trend trade, and that's the trade that typically wins 70 to 80% of the time. Keeping it simple, 3 rules. We're only going to use it on 2 charts. And guys, 66% of your analysis comes from the 13.2. You're going to use 1 bar on the 13.2, and you're going to be able to recognize a myriad of things. I just wanted to work myriad in the conversation. You're going to understand the trend of the market. If the background is green, we're in an uptrend. If the background is red, we're in a downtrend. Guys, one of the biggest advantages you can give yourself as a brand new user is trade with the trend. We're taking a trend trade. Rule number 1 must be true on the 13.2 chart. You have to have those strong triggers. There has to be that advantage of momentum. Rule number 2 has to be true on a 13.2 chart, making sure we're not trading into a place where the market is likely to stop. Guys, by the time you get through rules 1 and 2, you're trading with the trend. What you've done is you've given yourself an overall temperature of the market. You've looked at what the market is doing. You understand the momentum, that there's nothing in the way. And then it's just a matter of refining it. We're going to go to a smaller, faster chart. What happens in 1 bar? Safia, are you showing off at 9:08 a.m.? I can't wait to see it. I'm going to come back to it, though. Guys, we're going to take that broad stroke of the brush. You're going to take that broad stroke of a brush, and you're going to refine it on the 5-1. This is your entry chart. You're going to be able to take all this great information and whittle it down to the point where the market is likely to continue. And this is where rule number 3 comes into place. Using a limit order to buy or sell a pullback at an area inside of favorable large triggers. The 2 work together, and we use this 2 charts process because what happens in 1 bar on the 13.2, when you gauge the trend, when you gauge the momentum, when you make sure that there's a clear path, by turning your attention to the 5-1, you're going to take that 1 bar and it's going to transpire into about 15 to 20 bars, and you're going to be able to identify, really with pretty amazing accuracy, where the market is likely to continue, and take this to reduce risk, to increase profitability. You know I have to look, Safia, right? I can't wait until after the rules. Everything says up. Ooh, that's a Ron C trade. Very nice. The advantage of momentum, the advantage of a clear path. Safia, nice job. Ron C, she's going to send you a nickel. I think you've trademarked that one. What a great trade. And guys, the ability to take that trade that Safia just took, the ability to recognize these advantages in the moment comes from your study on that high probability trend trade, committing a simple 15 to 20 days to understanding these looks and the advantages is going to put you in the position to begin to create a plan that suits you. And it all starts with momentum. On that 13.2 chart, we have to have strong triggers. That's what the rules say. What is a strong trigger? Well, when that background is green, when you're in an uptrend, small triggers are above the large triggers. Large triggers are widening. It's the space created between the small and the large that lets me know that the odds are favorable for the market to continue up. Odds favorable momentum. You're going to hear me say that a lot in the room. Did you have odds favorable momentum? In a downtrend, small's below the large, large are wide, angled in the direction of the trend. That space created between small and large lets me know that the odds are favorable. That odds favorable momentum is going to be the precursor for any high probability trend trade. Because when the small triggers return to the large triggers, when they work their way inside, this is what we call a weakening of the large triggers. And when we weaken a large trigger, anything can happen up or down. So guys, this is rule number 1 defined right here in pictures. You're going to look for your opportunity for the high probability trend trade from that point when the large and small separate. The space is created right up until those small return to the large, guys. These circles on a 13-2 on these tails or these wicks, these are possible long entries. This is where this one bar gets refined down to an entry. So you'll be able to recognize in an uptrend, you'll be able to recognize in a downtrend where opportunities may have been present. And I'm going to teach you how to use those tails and wicks to, after the fact, identify and study these high probability trend trades. If you're new with me, guys, if you're brand new, and I'm having trouble seeing who's here today. I've got 41 of you. If you're on demo, if you're just learning the software, if you're working on that comfort level, give me a Y in the room if you're with me. Every high probability trend trade starts with that odds favorable momentum, right? Give yourself the advantage of momentum. Once you have it, we have to make sure that there's nothing in the way. And that's termination conditions, those areas likely to stop the market. A termination condition, really simply, it's just a Fibonacci-based area, and it may reverse the market based on a comparison of those same trigger lines that give us momentum in these key areas. And these areas can be a divergence high, a magenta line that extends from a pivot, letting me know that there was a loss of momentum at that high pivot. It can be red Fibonacci resistance. It can be one-to-ones. It can be blue support, or it can be a divergence low. These are the areas that may reverse the market. They're not guaranteed to reverse the market, but they may. And we're going to use a comparison of the trigger lines in the area to determine whether or not it's likely to stop the market, whether it has the potential to break, or whether it's already broken. And I made a picture for you guys this morning. If you've been in my class a couple times, let me know if this picture helps and makes sense. 3 possibilities on termination conditions. You know what, let's get this. Let's just make it big here. Good morning, Thala. There's a 2-part process to understanding a termination condition. The first part is that price reaches an area, whether it's support, whether it's resistance, but these price bars are going to come up and come in contact or a tick away from a key Fibonacci area. When price reaches resistance, if both small and large trigger lines remain below resistance, we've reached an area likely to stop the market. This, in the moment, is a termination condition, and you're not going to look for long trades because you do not have the advantage of a clear path. Is everybody comfortable with that so far? Price reaches an area, none of my trigger lines break through, no clear path. Guys, your small trigger lines, if an area has the potential to break, your small trigger lines are going to break through, and your large triggers aren't. This is what we call a 50-50 look, because 50% of your triggers are through the area, 50% are not. And guys, this look relies on odds favorable momentum. So when the small are above and the large are below, or vice versa, the small are below and the large are above, this is an area with the potential to break, but it hasn't broken yet. It's not a clear path. And then when both the small triggers and the large triggers clear that area of resistance, you can see resistance is behaving as support. As this is when we consider an area broken. This is when the path is clear. And look at that tail. With odds favorable with a clear path, rules 1 and 2 have been met on a 13-2. Guys, does this picture, if you've been in my class a couple times, I try new things every now and then. What have more than one thing in between? What do you mean, KR? Like what if there's a fib and a 1-to-1? Well, then you have two areas with the potential to break, right? But haven't broken? Couldn't we say that right here? The small triggers break through, but the large don't. Not only have they not broken through these small swing 1-to-1s, but they've also not broken through this area of support. So I'm not only trying to get through one area, man, now I'm hoping that two areas break. Does that make sense, KR? You guys, the more key areas you throw into a 50-50 look, the less likely it is to break. And even when it is a 50-50, when the area has the potential to break, you can see that the market reacts and then ultimately uses that odds favorable momentum to go to the next one. D, doesn't matter. That's the, watch this, D. I'll show you exactly what I mean too. D, I'm going to make this fib white. Has it broken? Absolutely not, right? That same white fib, does it have the potential to break? It does. Doesn't matter what color it is. Here's that same fib. And look, when it's broken and everything is above, you know it's acting as support. Guys, don't get caught up in colors. The fibs could be any colors in the world, but it's that trigger relationship to them that lets us know when they may hold or break. Does that make sense, D? This was a big aha moment for me. As I learned the software, realizing that just because it turned blue doesn't mean that I have a clear path. I'm using those trigger lines, that relationship, to help me identify areas that may hold, that have the potential to break, and that have broken. Guys, this is your high probability clear path look. This is your medium probability trade look, an area with the potential to break but hasn't fully broken. Guys, that is the easiest way I know how to define termination conditions, and we're going to go simplicity. And let's go to the live market, guys. This is crude oil. Price reached resistance. Absolutely no trigger lines broke through. Look how the market reacts. K-Dog, bottom right-hand corner, there's a full screen button. Just to the left of the chat box and down at the bottom, you can pop it out. Let's do that crazy one right here. If you click this one, it'll pop it out and give it its own look. And then if you use full screen, it'll bump it up a little bit for you. And then anytime I open a picture, guys, I'll try to make it as big as I possibly can. I'm on a 32-inch monitor here. So guys, using what we just learned, price reaches resistance, no trigger lines go through, we know not to take a long trade, right? Isn't that amazing? Because look how the market reacts. Smalls break through the area, the large do not. These are areas with the potential to break. KR, there's one of those examples. Both support and 1-to-1s haven't broken yet. You do get a big bounce. The market does continue. And then when both small and large get to the other side, the area is considered broken. There's a live example right in the moment, guys. Pretty cool, right? Price pulls back to support. All of the trigger lines remain above. Support's likely to stop the market. It doesn't mean that there's a trade there. All we're doing is identifying a clear path. Guys, price reaches support. The smalls try to break through, but they can't, right? Not a clear path. The market reverses. Guys, there's that reversal in the market. There's one of those tails. Small and large break. Resistance becomes support. Is everybody comfortable with that? Feeling pretty good about it? I hope so, because we're gonna consolidate a little bit today. I'm gonna give you this link to the video. Guys, this is a 5-minute video that reminds you that it's trigger lines and areas. It's not colors, and we need the clear path. And that clear path is gonna come when both small and large break. This is your highest probability. Give me a Y in the room if you're with me on that, and let's figure out how to get an order, how to get an entry, so that you guys can take advantage of these momentums, right? Take advantage of this clear path. Actually, you know what? I want to share one more termination condition with you guys. And we're going to use a small chart for this one. This is the only termination condition that I will look for on my 5-1 chart, and that's 3 divergences in the same price range. 3 divergences. Guys, I'm going to simplify. I'm really in a simple mood today. I hope that's okay. Divergence means a loss of momentum. That's all it is. There's not levels of divergence. We don't weigh them. If you get a negative number, doesn't matter what number it is, and it prints a cyan line from a low or a magenta line from a high, it means that momentum is not following price. If you see this 3 times in the same price range, it may terminate the trend. It may not terminate the trend. It might just create a push large enough to take away your advantage of a clear path. So 3 divergence may terminate. When your small triggers go from odds favorable to anything can happen, it becomes even stronger. When that 3rd divergence is higher than the previous from a low, or lower than the previous from a high, it becomes even stronger. Guys, you're going to recognize this look on your 13-2 or on your 5-1 chart. Maybe when the market is seemingly turning from someplace, you'll be able to see these multiple divergences, these losses of momentum, and just kind of help you gauge that things may be changing. So currently in the market, I have small triggers above the large triggers. I have the large triggers wide and angled in the direction of the trend. KR, do you see it? Divergence high as well as resistance. We have an area with the potential to break. But guys, this area has not broken yet. Which means that if you were looking for a trade, this would be what we call a medium probability trade. It doesn't mean that it's not a good trade. It just means that it may require a little more assertive management, identifying trouble spots, and being able to take it. But great entries, guys, create manageable trades. So let's talk about entries. I'm going a little faster today. If you need me to slow down, if you need me to recap, guys, don't hesitate to ask, please. Let's go back to our recipe. And guys, I noticed that I have three little notifications here coming from, what are we at, Discord? I'm just going to warn you guys now, please understand that if you ever send me a message during class, there is a very good chance that I'm not going to get it during class. So I don't want you to think that it's personal. It is very much not. I'm looking at them right now. I've got someone that needs to get into the class. I'm going to try and help them out a little bit. So I apologize for the delay. All right, here we go. Rule number 1, 13.2, we have the advantage of momentum, right? Sometimes they can't get in a class, Gary. That's what that one was. I get these messages sometimes, and if I don't notice it, I apologize. Rule number 2 gives us the advantage of a clear path. Strong market pushing in the direction, absolutely nothing in the way. So now we need the entry area. Now you need to be able to identify where the market is likely to continue. And you're going to do this by creating a window of opportunity, by using a limit order to buy or sell a pullback at an area inside of favorable large triggers. When my rules are met on the larger chart, this is my look on the 5-1. My large chart in this moment is going to have strong triggers to the upside. My large chart in the moment is going to have a clear path, and my small chart, my 5-1, my refinement chart, is going to have nothing but a bunch of up bars, and you're going to begin to worry that the market's going without you. You've made the decision that it's time for a trade, and you're going to focus your attention on these 5-1 large triggers, and if they line up with blue Fibonacci support, mid bands, 1-to-1s, this is going to be the area that we're going to watch. But the rules say that we're going to buy a pullback. And a pullback is nothing more than a small retracement in price. If everything says up, you're looking for the market to come down. If everything says down, you're looking for the market to go up. A pullback begins with a reversal bar. And at the time of this reversal bar, you get to draw your window of opportunity. You get to recognize with pretty amazing accuracy where the market is likely to continue. Your window of opportunity for a long trade will go from the highest point of support to the lowest point of support inside of favorable large triggers. Your window of opportunity for a short trade will go from the lowest point of resistance to the highest point of resistance inside of favorable large triggers for the trade. Favorable large triggers, guys, I like to define this one. Small and synthetics, one on top of the other, overlapping, strong in the direction of the trend, guys. The tighter these trigger lines are on top of each other, the closer they are together, the smaller this window of opportunity becomes. When you draw that window of opportunity, your limit order goes at the top. Because of the momentum, because of the clear path, we're going to try and enter at the top of the window rather than hoping that it makes its way to the bottom. My limit order was right at this mid band, a tick or two above. The market gives me that small retracement counter to the underlying trend. And I am now in a long position at 79.21. I have bought the market with the expectation that it will continue up with the trend, that it will continue up with momentum, that it will continue up because I have a clear path. And now I have the advantage of the entry area, of that area where the market is likely to continue. Guys, can I ask you for a yes? This is the one that you're going to focus on for 20 days, your first 30 days trading, right? You're going to take a look, identify your areas, look at your trigger lines, wait for a reversal bar, create a window of opportunity, guys. Areas inside of those favorable large triggers. And if it comes to that window, maybe 40 days, that's all right. Everybody's different, Zeba. Kulu, if the mid band is below the triggers, is it inside of favorable large triggers? Nope, then it's not a part of that window, is it? It's almost too simple, isn't it? If it's inside of the large triggers, that's your window. Guys, by taking that trade inside of the window, your initial stop goes below the window where the market shouldn't go. But on that high probability trend trade, typically 70 to 80% of the time, this is my result. Once the market moves in the direction of my trade, I'm going to reduce my risk because I waited for the pullback. I've increased my profit potential. And Kulo, I've got some great pictures of that too that kind of illustrate only one line inside of those favorable large triggers, right? Just the mid band. Look how small the window of opportunity is. I'm not worried about these 1-to-1s. They're not in the triggers. I'm not worried about this resistance. It's not in the triggers. From the top of the triggers to the bottom of the triggers, I'm looking for the areas inside, and I'm not worried about the ones outside. Once again, both the midband and the 1-to-1s overlap. This blue fib hanging out in the middle of nowhere, that's not in my window because it's not inside of those triggers. Here's one that puts the two together. And this is what we're going to do today a little bit. And this is what I'm hoping you guys will do over the weekend. On your 13-2 chart, when you have odds favorable momentum, when you don't have those termination conditions, guys, and you see one of these tails and you're just scrolling back, circle the tail. And if you circle that tail and it lines up with the area of support inside of favorable large triggers for a long, guys, you know that you have a high probability trend trade. You know that the rules are met, that this is your best of the best. Your job is to burn this image into your mind, to create trust in this image, to understand that when it happens, the advantages are there. The advantage of momentum, the advantage of a clear path, and the advantage of an entry where the market is likely to continue. Great question, Kulu. So ideally, no, there's no such thing as too many questions. I can't stress that enough. And you know, I thanked someone the other day for all of their questions because it drives this class. You're asking it, but 10 people are wondering it, right? Thala, you love that word mandatory. You can do whatever you want, right? But your highest advantage comes from having an area inside. Guys, think of it throwing a ball against a wall. Everybody's done that, right? Kicked a ball against a wall. This retracement is you throwing the ball as hard as you can at a brick wall. These areas give it some place to bounce. Does that make sense, Thala? And this is for the high probability trend trade. But what may happen later in life, as you learn to read your indicators a little more, you may recognize second chances, opportunities to get into a trade that maybe you didn't. Can you show me the picture, Thala? Take a picture, point it out, write on it, post it in the class. We'll take a look. I can't see crude oil right now. And we'll talk about the advantages and we'll talk about the disadvantages. But Kulu, when we talk about the best of the best triggers, I love strong triggers on my 5-1. Small's outside of the large, right? This is odds favorable momentum. But the one thing that I want you guys to know, 5-1's a smaller, faster chart, right? It's a refinement chart, Kulu. Chances are the small triggers are going to turn against you. It's the only way we can get that retracement back. And you'll see it in almost every trade. Small triggers turn against, but if they're outside, if they're odds favorable, if they're strong, I love that look. Small triggers turn away again, but notice how they're outside of the large. Small triggers turn, but they remain outside. That's the best look for me. Because what's it mean when those trigger lines start working their way inside? Well, it means that we're losing momentum. You see it on the 13-2. You see it on the 5-1. This is crude oil, Thala. Which one were you looking at? If this were your entry, here we go. Let's see what you're looking at here. Can you take a trade when the ticker is within the trigger line, but not in an area? So the Sunday school answer is wait for areas inside of favorable large triggers, right? It creates an advantage. The reality, Thala, is that you can do whatever you want. I had resistance right there. Did you not? So for me, I had beautiful resistance. And this was synthetic. This was coming from my 13-2. That's one of the reasons is you're on 8. So 68.31 was resistance on the 13-2. You can But do you see this gap in between price and those large triggers? You notice that the large triggers are still above the area. This becomes a little more difficult trade. The trigger lines are not one on top of the other. Your stop's going to be a little bit bigger, but yeah. And the biggest challenge for me on this one, Thala, is my pivot isn't coming from an area. So once I hit this mid-band, that's kind of my goal. Yeah, that's what I'm looking for. I'm looking for that mid-band to get hit. It's already been hit on the 13.2, and you see that price sucks all the way back to those large triggers. This is kind of a messy look. This mid-band may hold. My trigger lines are split. Good morning, Abdul. But if you took a shot from resistance, you'd want to make sure that you managed it. It's a good read. It's a great read, what you're looking at right now. All right, guys. You're welcome. So it's Friday. We're going to watch the live market as much as we can. We're going to watch your charts as much as we can. News in 4 minutes. Guys, high impact news in 4 minutes. Is everybody comfortable? And I know that if you're brand new, it takes a little bit. It takes a repetition to get there. A trade is momentum, a clear path at an entry area. We gauge momentum on the 13.2 with strong triggers. We gauge a clear path by not having a termination condition. And we gauge our entry on the 5.1 using those areas inside of favorable large triggers. You're short at 68.31, edge trade. That's a different kind of trade that Jerry's taken. It's a chart reading trade. Jerry's got information that says that 68.31 is likely to hold to the downside. And he took a trade because of it. Look at this, guys. 1, 2, 3 divergences. Right off resistance with every trigger down, with every trigger down, with odds favorable momentum. It feels like a lot of advantages there, doesn't it? It's not a high probability trend trade. Fighting. Gary, those large triggers aren't a full bar away anymore, are they? Guys, the mid-band already had a bounce, right? It already had a bounce. It already had a test. Large chart, the mid-band can be a termination condition if the triggers are a full bar away. Notice that where the mid-band is hit here, the relationship of the triggers, termination condition. As it comes and retests, those large triggers are no longer a full bar away. Guys, that's some chart reading. This is your S&P. Does it, Thala? We'll scroll back and look. Guys, news is coming out in about 2 minutes. You know what's interesting, Thala? Is that crude oil has been, the market opened at 9 a.m., right? We're 43 minutes in and you're already bored. I do it too. 90% of what we're doing is waiting for advantages, right? 90% of what we're doing is we're just reading those indicators and we're waiting for those advantages, waiting for the opportunity for things to shake out. Patience is key. Guys, 2 minutes till news. I'm going to leave the S&P up here. Abdul, you know I'll take a look. Are there any questions about momentum? Are there any questions about termination conditions? Are there any questions about entries? And guys, once again, I'm gonna post this picture in the room one more time. I want you to keep this picture because it really simplifies termination conditions for you. You either have a clear path or you don't, guys. It's pretty black and white. It's that center picture. It's that May break. That's when you start getting outside of high probability. 50-50 trades. Smalls are through, large are not. Look at your 5-1. There's one loss of momentum. There's two losses of momentum. So not only do I not have a clear path, I'm also losing steam. Guys, this isn't your best of the best look. I'm waiting to see what news does. If you've never seen news, guys, it's a lot of fun. I personally don't trade into news. I find it anything but advantageous. So we'll see what happens, and then we're going to scroll through and take a look. I'm going to start looking at your charts. It's fun to watch. FOMC is a blast to watch. Let's see if we get a reaction out of it, guys. We may not. But isn't it nice to know that it could go a little crazy? And because we know that it may get a little erratic, we don't have to put ourselves in front of it, right? We'll see what happens. News was just released. There may or may not be a reaction. There probably won't be. Oh, there it goes. Just a little one, right? You know what's absolutely amazing, guys, is the patterns still work. Even during news. We still have a termination condition. Right? Smalls are through, but the large are not. I can't go long yet. I can't take a short. Smalls are through, large are not. Let's see what happens. Right into a termination condition, a magenta high, and it pushes the market back down. And guys, you're witnessing the fight between buyers and sellers, and you're watching it happen at key areas. And this is that 90%. This is waiting for a breakout. If it breaks out to the upside, if I get odds favorable momentum, I'll look for long trades. If they decide to break through this bottom, this 93, 39, 43, 75, well, then I'll look for odds favorable momentum and a clear path for a short trade. You don't have to predict. You don't have to be first. Do you see how that is? Termination condition to termination condition, guys. Either 52 or 45.36 has to let go. Give me a Y in the room if you see it. And I squished this up so you can see just how flat it is, how they're in that range. Termination holds, but there we start to get momentum. Things are starting to push down. Small triggers break through. Large triggers haven't broken through. Little bit of a split on the triggers here, right? Now they're starting to come together. Bottom of the window, top of the window. Loss of momentum on a 50-50 trade. The market's pulling back. This is what we're seeing, right? Right to a mid-band, right to resistance with all the trigger lines below it. Is it, Abdul? Yeah? Why? Because you have momentum? Because you're breaking through that termination condition? Because you had a pullback to an area of resistance inside of favorable large triggers? You're darn right. If that's your rule, Josh, it sure does, right? If that's your rule, absolutely it does. Strong triggers, I can take a look where the market is likely to continue, right? What about now, Josh? Pulled right back just below that mid-band with odds favorable and no termination conditions. And there it goes. Guys, do you see how every chart agreed? Every chart said down. We had momentum. We were clearing the termination condition. We had an area for entry inside of favorable large triggers. Now I have three divergences in the same area. It may still go down, but I can see that I'm losing steam. Do you guys want to give me a Y in the room? Watch this. Odds favorable. Let's circle a tail. Abdulaziz called it out, didn't he? Before it ever got there. He said this is a trend trade short. It's that anticipation, guys. Your chart reading will take that. Is it, is it, and turn it into a heck yeah, there it goes. Great job, Abdul. All right. Let's find the entry, guys. Small's below the large, smaller through the divergence low, the larger not. Everything is below resistance, right? So if we're going through that, guys, if price retraces to 39.45.14, is this an area likely to stop the market just based on what you know about termination conditions? Because this is how I want you to think about things. If price pulls to 39.45, well, that would be a termination condition going up, wouldn't it? Does that make sense? If then, we're processing it in our heads, all of my trigger lines are below resistance, resistance is likely to hold the market. So I have odds favorable momentum. I have smalls below the large are down. They haven't gone through that divergence low, but all of my trigger lines are below 39.45. All of my, which definitions? I'm going to say yes, absolutely. Of momentum and termination conditions and all that good stuff. Guys, it almost seems crazy, right? Here is from the education page, Thala. Click on the tutorial section. Rule 1, Rule 2, Rule 3. Pretty cool, right? You can go back and you can review this 1,000 times. You're very welcome. And you know what? I have a checklist as well, guys, but I want to do something with it. I have a high probability trend trade checklist that has the pictures of what it means for the rules to be met. That's really big. Is the market coming from a good top? Are there termination conditions? So Thala, there's the Cliff Notes cheat sheet of the rules and pictures stolen directly from the manual. Let's do an entry real quick, guys. Rules 1 and 2, we're good on the 13.2. Is everybody comfortable with that? It becomes a medium probability trade, but right now the only thing I want you guys worrying about is entries, because great entries create manageable trades. Everything's going down. We watched it live, but we'll replay it. And we wait for the reversal bar, and the reversal bar lets me know that there's a potential pullback. At the time of the reversal bar, from the bottom of the triggers to the top of the triggers, from the lowest point of resistance to the highest point of resistance, guys, here's your window of opportunity. One thing that adds warm fuzzies to a trade, guys, is when every trigger line has cleared a Fibonacci area, and that Fibonacci area lines up on both charts inside of favorable large triggers. If I'm getting in at the bottom of the window, there's my limit order. And the market comes up and fills me at 43.50. And it continues up. And I'm down a point in the trade, but I'm still in the window. Guys, this is an important thing to remember. This window, just because we get in at the bottom because of the momentum, price can still move up to the top, right? Give me a Y in the room if you're with me on that. This is where the market is likely to continue. Not that one line, but that area between the top and the bottom, bouncing off of those potential areas. Let's see what happens. As this one goes to the top of the area, doesn't it? And then it gives a reversal bar. And by the end of this reversal bar, you're starting to be in the money. And your stop is about right here, where the market shouldn't go, above the reversal bar. And then all of that momentum It doesn't even blink till 38.50, guys. $200 later. The small did, didn't they, Josh? Didn't the small get to the other side? If absolutely no triggers break through, no clear path. If the small get through the area but the large don't, it has the potential to break. When both get through, we have a clear, right? So it didn't stop printing. As it pushed down, the smalls got there. They started to work through, but they didn't get there. Now the smalls have broken through. And then there's the bar that gave us the pullback. Does that make sense, Josh? Awesome. So guys, your job this weekend, and Thala, you said that there weren't a lot of opportunities in crude, right? That's okay. So this is what I want you to do this morning in crude, and we can do it together. Every time you have the rules met on the 13.2, circle a trade. See if it was a rules-based trade. This is the S&P. Jerry, nice long. What do we think, guys? Does it happen every day on every market? Odds favorable, smalls are through, large are not. Does it fit the rules? What do you think? Let's take a picture of it. All right, guys, it's presence on Friday. What I just put in the room for you is a high probability trend trade checklist, guys. These are the rules, keeping you focused on the absolute best. D, what does? I'm sorry, I read that a little late and I'm not entirely sure what it does was. Guys, this checklist will keep you honest. It'll keep you focused. And the cool thing is if you have Snagit, you can drop it onto a chart. Let's take a look. So Thala, and who else is new in here? I know we've got a few of you. Thala, Kulu, I'd love for you to work with me on this one. Guys, is the market coming from a termination condition down here at support that creates a full reversal? Absolutely, right? I can check yes. Did I have odds favorable momentum? I can check yes. Whoops, and it just kicked me out. Oh, Discord. Guys, I'm on my way back. You can hear me. I'm in a dark room. I'm in a glass case of emotion. All right, let's get there. Dun, 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 dun. All right, can everybody see me again? Sorry about that, guys. Sometimes Discord messes with me. So now we're saying no termination conditions. The smalls are through, the large are not. It's odds favorable momentum. Guys, it's okay to annotate a chart 50-50. It's not your odds of survival. It's just saying that this area has the potential to break, but it hasn't broken yet. And then did we have a perfect area right inside of favorable large triggers? Absolutely we did. Thala, Kulu, Jar Jar. Medium probability trade, right? If you enter at the best of the best spot, check this out. Once you get a reversal bar, there's your stop. Maybe a point. And because it's medium probability, you're going to manage it aggressively. Maybe if you get another divergence, the small triggers work their way in, you might have to manage out of this trade. This one didn't require it. Guys, this is a beautiful 50-50 trade. Your job is to go back this weekend, to circle these tails, to line them up, to determine that the rules were met. And I want you to take a picture and upload it to Screencast. And guys, does everybody have their spreadsheet? Which trade, Ziba? Put it in your spreadsheet. Ziba, if I entered the market here, my initial stop would be where the market shouldn't go, right? And that in this case is approximately 12 ticks. Down here where the market shouldn't go. So far, so good? Once I get a reversal bar, my stop is right behind that reversal bar, 2 ticks. That's my only stop movement. And Ziba, everybody know what's not good. Initial stop, where the market shouldn't go outside of the window. Do you have that one? And Ziba, it depends on your management plan too. Are you doing a very mechanical management plan? Profits at 100, profits at 200? All right, so let's do this on the management side. This is a great question. Have you seen this one yet, Ziba? I know that you have. If you trade 2 contracts, your initial stop will be 12 ticks, adjusted above or below the window of opportunity, right? Beyond the areas inside of favorable arch triggers. Are you comfortable with that one? Whoops, let me do this. Open it in a new tab, open it in a new tab. Guys, this is a crazy mechanical, pragmatic, no emotion. Initial stop goes outside of the window of opportunity. This is my entry at the area of resistance inside of favorable arch triggers. These are my preset targets, $100 and $200. If I get a reversal bar, my stop gets moved 2 ticks above the reversal bar. Ziba, so far so good. I'm not moving targets. This is my only movement right now. So I'm not doing anything. Either my stop gets hit or my first target gets hit. That's my only option. When my first target gets hit, I'm going to move my stop to break even. Guys, I'm not worried about anything in the beginning other than entries. I won't move my stop again until my second target is hit and I'm out, or I'm stopped out break even. And if it catches that second target, it's a $300 trade. So Ziba, it doesn't matter if it's crude. It doesn't matter if it's the S&P. It doesn't matter if it's long. It doesn't matter if it's short. My initial stop goes outside of the window of opportunity where the market shouldn't go. Once the reversal bar prints, I'm 2 ticks below it. When I go from 45.75 to 47.75, I'm out on my first contract and my stop is break even. And then when I get to 49.75, I'm out of the trade for a $300 winner. And I don't care what happens after because I'm being very pragmatic. I'm keeping emotion out of it. I'm not worried about anything other than being able to recognize where the market is likely to continue for my first 30 days. And that's why there's that mechanical, right? Ziba, your entries have been amazing. So now your next step is to focus on that mechanical approach to management. And then ultimately, guys, didn't the 13.2 say that we were probably headed all the way up here? Look at that momentum. You'll be able to hold for longer moves. You'll be able to hold for bigger targets because of your chart reading. So the very initial, the mechanical, the basic approach is doing nothing more than keeping your emotions out of it while you learn to read your indicators in the moment. Did that help, Ziba? You know what? I find those videos complicated sometimes too. And that's one of the reasons why I created these slides. That's one of the reasons why I put this together. There's the PowerPoint, guys. You can literally go through and walk through the process and take these pictures. And the great thing is you can go back and you can take what you've done, whether you managed it well or not. Let me go back and find a trade that you guys posted. You know what? Chances are Luciano's is going to be a high probability trend trade. Let me click on Luciano's real quick. Odds favorable momentum, smashing through, perfect entry, right? This creates an opportunity to recognize management. Luciano took one up here, probably predetermined, looks like 5 points. And then he trailed his stop behind the trouble spot. So this entry, guys, look at Luciano's entry. This is why we focus on entries in the beginning. Did you ever think in a million years? So Ziba, what you need to do is every time you take a trade, you need to practice it. The repetition, right? Repetition's going to get you there. Just like you practiced your entries. And Ziba, remember, you want to be at the finish line, but you're still at the start line. Give yourself a little bit of grace there. Guys, look at this entry. It's like a sniper. There's his stop after the reversal bar. Risk is virtually nothing because Luciano has done the study to understand that when the rules are true, this is where the market's likely to continue. I love it, Ziba. I can tell you John Novak, and we were having this conversation in the class earlier today, guys. Has anyone ever noticed that John Novak walks into class, he goes, hey guys, I was studying XYZ. Hey, I was studying this chart and looking at entries. I was studying this chart and looking at momentum. I was studying this pattern and seeing if it repeated itself and if the results were positive. Have you ever noticed that he never shows up on a Monday and doesn't talk about the market replay that he did? That he doesn't talk about, he always talks about the pictures that he's taken. He has 30,000 pictures. This gentleman wrote the software, trades it daily, and he still studies like it's day one. Guys, there's a huge lesson to be learned there. He likes to learn. And the more he learns, the more efficient he becomes. But it all starts, guys, with a foundation. It starts with understanding 3 simple advantages. Thank goodness, Ziba. Oh my gosh, thank goodness. Yeah, thank goodness for only one Mark Novak, too. Guys, we would have to take over the world if there were more of us. But does it make sense? Let's keep it simple. Let's focus on those entries. You have time to learn how to manage trades, right? That's what simulator's for. And guys, this is what the spreadsheet is. Every great entry has a management opportunity. So Ziba, if you take a trade and you feel like you messed up management, you have to go back and look at it. Well, what did I see? Did anything change? And watch this. I love to do this. Ziba, here's my entry. This is a trade I took a while back. From this point to this point, did anything change? Did anything get bad at all? Nothing, right? If anything, it got better. My triggers rolled. I got stronger triggers over here. You begin to recognize these things and you realize that when this is strong, when everything's pointing down, your targets get further and further away. You start to use that Fibonacci. But until I can look at this trade and take it and take that emotion and that adrenaline out of it, it's okay to take quick profits all the way down and then just wait for the next best trade. But every trade that you take creates a management opportunity. You've got to go back and look at it. You've got to take that picture. You've got to post it in class. You've got to say, hey, Mark, what do you see about management on this one? Could I have held longer? Should I have gotten out sooner? Did I miss a change that I didn't know was there? And that's your path, guys. And this is how I'm going to end right before I take a little break. This path has been consistent for a long time, guys. Your path to becoming a consistent trader, ASAFP. Post your trades in class. Everything you do, win, lose, or draw, show me what you're done. If you lose a trade, I want you to be excited. Excited to show me that trade and for the opportunity to learn. And then track it in a spreadsheet. Ziba, you put yours in Word so you can write. I love it. You don't have to use the Excel spreadsheet. Do what works for you. Ziba, I think that's brilliant. I prefer Word over Excel all day long. I've gotten better at Excel, so it's not as bad, but I like it. Guys, learn the rules when it's okay to trade. This classroom is dedicated to teaching you the rules, 15 hours a week, every week. Simulate. Don't trade your live money when you're learning, guys. There's no reason to put yourself in that financial position. Post pictures in class until you're sure you have the correct rules. Or trade your live money. I don't tell people what to do. You do what you want. But you have the opportunity to simulate. Post the pictures. Don't practice the wrong trades, right? Don't just play around because it's sim. Practice the right ones. Simplify. 3 rules, 2 charts. What will you commit to? Study them so they become easy. Guys, this is my spreadsheet. My spreadsheet has 130 pictures of high probability and medium probability perfect 50-50 trades. I just gave it to you in class. You can take this weekend, click on every one of these links, and burn that image in your mind. Go back, retrade the day, fix your mistakes, take pictures of the correct trades. Do this every day until you're following rules, until you are so focused on your rules that you don't care if they win or lose, that you are obsessive about execution. Because when you're obsessive about execution on a high probability trend trade, guys, you have a trade that typically wins 70 to 80% of the time. You are guaranteeing yourself that you can win. Does that make sense? Guys, that's your path. Embrace it. I fought it. Tooth and nail, hard as I could. Cost me $5 grand in 2 days. I would have had a lot more fun at Disney World. I'm going to take a few minutes, guys. I'm going to leave you with the live market. If your rules are met, take a trade, post a picture. If your rules aren't met, sit on your hands. Safia, I want to see those trades. Because anyone that tells you that they've never taken an emotional trade, anyone that tries to tell you that they haven't revenge traded or broken their rules or taken the same bad trade 8 times in a row because they were convinced it was going to win, they're lying to you. I've done it. I did it last week. I still do it. I teach this class and I still do it. And I'm trying to do it less and less every day. It's not. It's just a learning process. That's all it is. It's just a learning process. Guys, that's what simulator's for. Who did I tell yesterday? Ziba? I told Ziba. I said, Ziba, go to Walmart. Go buy a Monopoly, right? Take all of that pretend money to your driveway and set it on fire. There will be zero sting, right? You're not going to panic about that golden $500 bill because it's just simulated money. Just like this is simulated money. Guys, there's a termination condition. This termination condition appears to be changing the direction of the market. And, well, Safia, that's on you then, right? If you're still learning, do you need to be on live money? I'm just asking. It's up to you. You can. Then why do it? Why do it? That's just me. You can do whatever you want to do. I am definitely not your accountant. And then use Apex. I love that, Gary. Guys, I'm going to take a few minutes. When I come back, we're going to get into all your charts. We're going to answer all your questions. And then we're just going to keep watching the market. We're going to recognize odds favorable momentum. We're going to recognize areas with the potential to break. Watch this, guys. How easy is this? I just right-clicked and activated a limit order at the top of my window of opportunity on a medium probability trade. Give me a Y if you understand why this is medium probability. The smalls are above, the large are not. I'm coming from a termination condition. I've got no divergence. I have to adjust it, right? There's an entry at an area inside of favorable large triggers. And guess what? That area wasn't going to break. It had the potential to break, but it didn't. Medium probability trade. But you know what I want to see from you guys? And it's funny. And it's hard to embrace this, isn't it? Guys, I want you to show me this picture with a perfect entry at an area of support inside of favorable large triggers. Let me know that you understand the concept, and then what you'll do is you'll start to weed out the fact that the large triggers hadn't gotten through a divergence high, that the large triggers hadn't made it through an area of resistance, that this is not a clear path at all, that this is not a high probability trade, and that you can't have the same expectations of winning a medium probability trade as you do of having a high probability trade. But if you're learning that entry, if you're nailing that entry, and you're following the rules and you're giving yourself the advantages, more often than not, that one's going to find its way to the next target. I'm going to leave you guys with the market. I'll be back in just a minute, and we'll start that next hour. Another medium probability, right? The smalls are through, the large are not. Isn't the window of opportunity the same process, though? That never changes, does it? Odds favorable. There's a window. Look at how close those trigger lines are to the large triggers. Look at that loss of momentum coming through. And guys, there's a 50-50 trade that once again isn't working. When I see 50-50s not work in a range, watch how we can use Fibonacci, guys. All the way up, just shy of resistance to support to resistance to support, and we're creating a bounces. We're looking at literally areas where the fights are happening. And now we'll just wait for the advantages. Wait for everything to agree. Wait for everything to say go. All right, I'm going to go through. I'm going to start looking at some of these trades that you guys posted today. Understand that I have to scroll all the way to the top. So when I scroll all the way to the top and you post a question, and guys, I don't always see it immediately. If I miss your question, just repeat it. Post it back in there, please. Let me know. Ron got us going today. Ron loves momentum style trades. Ron loves odds favorable momentum and a clear path and a very decided target. And he'll jump in and take a chunk out. I love that trade. And then Ron, trying to give me heartburn, says, trading one of those trend trades. Not quite, but great execution. Understanding that three divergences may reverse the market. Understanding that three divergences may reverse the market. Waiting for the smalls to get above the large to trade with the trend. There's a lot of reasons that one could work. There's a lot of reasons that one might not. And it goes right up to resistance and everything rolls odds favorable and right down to that key area. Guys, we're going to build a foundation, right? I love it, Ron. Guys, you're going to understand how to read your indicators. You're going to create this foundation where you can recognize these key components in the moment. Understanding where the market is likely to continue. Understanding where the market is likely to go. Being able to gauge momentum, being able to gauge that clear path, and you're going to take this foundation that we create in class together, and you're going to turn it into your trading plan. You're going to turn it into your comfort level, where you're at. Bobby put this one in the room today. He used his checklist. Is the market coming from a good top? Absolutely. Odds favorable? Sure enough. No termination conditions? Nope. Clear path. Area for entry inside of favorable large triggers, he says yes. You guys see the difference? This one didn't make it to the area. Might have gotten an entry there. This one was smack dab right in the middle of the area. But every chart agrees. And I think this is one of the biggest things that I want you guys to recognize is that when every chart agrees, every chart says down, every chart says up, every chart has momentum. That clear path is present on that large chart. Guys, these trades become effortless and stress-free. They really do. But you have to study it, you have to look at it, and you have to build that faith. If you see this look 100 times, guys, approximately 70 of them are going to win. Means 30 might not win, right? 20 to 30 are going to get run over. Like they were getting paid to do it. Guys, this is why we're building trust in the rules. This is that repetition. This is why you should fill this spreadsheet with as many pictures of that great look as you can. You're going to develop trust in the rules, and you're going to find yourself not hesitating. When the rules are met, you're going to take the trade. Safia, odds favorable, clear path, taking a page out of Ron's book. Nice trade. Gary, 50-50 trade, right? Great top, odds favorable, no divergence. Tried to wait for confirmation. Rules were correct. You get in. You're able to make a little money. It's that 50-50, right? You wanted to take the trade because this stopped out early as a result. If you got in at the area, your stops kept you safe outside of that window of opportunity. And 68 flat is 6 ticks better. It's a great trade, Gary. Nice job. Safia, let's see what you did. Odds favorable, termination condition. Let me scroll to the bottom and see what you guys are doing. Safia, smalls didn't make it through yet, right? Just want to make sure that you see this. You said that it was a 50-50. I agree with the odds favorable. Termination condition. I love that. Thought it would pass. The most expensive accessory I own is my opinion, guys. Excuse me just 1 second. I've got the prettiest lady in the world saying good morning to me. All right, guys, I'm back. Sorry. I'm old. When she says she wants a kiss, I got to give her a kiss. Termination condition. Safia, I'm not sure if you're listening. But guys, if you're brand new and you're with me here, thought it would pass, right? I thought it would pass. It didn't, did it? Old or young, that works. Amen, Bobby. And I think that this is a great lesson. And I've told Safia this, and I've been real honest with the class. Guys, this was my biggest challenge as a new user. Feeling like I was missing things. And then when it's not perfect, taking the trade anyway. Rule number 2 broken. And you know what's funny is because I know how common this is. This morning when I was taking pictures, I fired up Simulator, and just for grins, I took a trade directly into a termination condition. And this is exactly the result that I was hoping for, guys. And this is why I don't do this in real life. I know that you're supposed to practice the correct trades, but I've been doing this long enough. I can create a lesson for you. Odds favorable, right? And an entry at an area inside of favorable large triggers. Guys, rule number 2 is designed to keep you safe. Rule number 2 is designed to give you that clear path, and you'll be amazed at how often these areas hold. Safia, I love that you posted the picture because I think it's important to post these. And if you write on there, you really got into your brain, right? You wrote that you thought it would break. You wrote that you thought, yeah, it's reinforcement. Someone asked me yesterday, well, how do I get that checklist onto my charts? I was like, well, you can buy Snagit and you can just drop it right in. Or guys, you can type your rules. And when you type your rules, you reinforce the lesson. When you type the rules, and Safia, what you need to do is go back and re-annotate this one and put traded into a termination condition and lost. Take a picture of what it looks like after. And I say that not because we want to drum up bad feelings, but isn't this powerful? If I wake up tomorrow and I look at this picture of me getting my butt handed to me, run over like a freight train, isn't this powerful? Doesn't this make me say, gosh, I don't want to do this again? I want to avoid that. And Safia, like I was telling you, this was my biggest challenge as a new user, was trading in termination conditions. So much so that every time I took a trade, before I got into the trade, I would take a picture and I would literally type whether or not there was a termination condition, because I needed that reinforcement, because rule number 2 was my absolute favorite rule to break. And the results were very much like that. Every time. Well, not every time, but most of the times. And every now and then, it would give me a winner on it and just reinforce those bad habits. Gary, 50-50, multiple divergences. You said, you know what? I'm not taking this trade. I love it, Gary. Good read. Reinforcing rules, right? Reinforcing rules. Abdul, let's see what you have, my friend. Bad top. Mid-band holds. You're in at the large triggers at the HVA. Abdul, what kind of trade is this? And I always ask, Is it? So your 21.3 was screaming down? Absolutely. I like that you're going with the direction. So Abdul, this is, and I love it. We're going to talk about this one. Because of the mid-band, your management was tight. You recognized it. You're not coming from areas. You're coming from that 30. You get in at 32. You get in at the HVA. Abdul, I think that if you're going to take this trade, you took it as well as it can be taken. Taken. And I think quick profits was a great idea. And I think not holding and hoping was another great idea. Because of this bad top, because that mid-band may ultimately hold, and because of that gap back to the large, and then I think it came and danced and then ultimately went down. I think that you took this trade as well as it can be taken. You had the support of an HVA line. You had that confirmation of reversal bar. You had all your triggers rolled. You were taking a chance on that mid-band not holding. Nice trade. Great execution. Not a high probability trend trade, but great execution. And Thala, I believe you were asking about that trade. Abdul took it for you. Everything says up, and you're kind of hopping in after a loss of momentum. Let's see what happened after. Getting in at 30, getting in at 30. So you're counting on this area to hold. It's an interesting trade, Abdul. You're not trading from an area, right? Once again, you're kind of in there. We're losing momentum. We've lost momentum once. And you just kind of popped in. And quick profits again, using that HVA line. Right on. That helped for sure. Interesting trades. They're great reads. They really are. It's good chart reading. A little outside of those high probabilities. Stops have to go down here where the market shouldn't. So you're looking at 15, 20 ticks with a loss of momentum and a loss of momentum. But I think that it worked out well. I'd be curious to see how often those work out. And then this one I like, 50-50, no divergence, perfect entry, coming from a great top. I love everything. This, for me, is the easy trade. And then it pops all the way down to those one-to-ones, and you took your profits after the reversal bar. I like it. Nice job. Great trading this morning. Great trading this morning. Guys, remember that Abdul's plan isn't your plan. Safia's plan isn't your plan. Luciano's plan isn't your plan. My plan isn't your plan. Your job is to create the foundation and understand what feels best to you. What looks do you see? Do you recognize? Are you comfortable with? And then we talked about Luciano's earlier. One of those 50-50s. And then bingo, our favorite word. It means profit targets reached. Safia, let's see what you got. There's that 50-50. Smalls are breaking, haven't quite. You take a nice entry, stop keeps you safe, quick profits, nice job. Safia, not letting those trigger lines break through a little bit. Watch that. Zeba, momentum style trade. You had odds favorable. I think your real entry was up here at 58, Zeba. You're welcome. You too. Enjoy your weekend. See if I can make that bigger. Everything says down. It pulls back to the areas. Zeba, I think that your best entry was right here at resistance inside of favorable large triggers. But as it breaks down, you still have that momentum. And you take a nice little stab back to the one-to-ones. Honestly, that's a really pretty. Why did you cancel? I'm going to come down to the woodlands and I'm going to duct tape your thumbs to your hands so that you can't cancel trades. Great re-entry. So where in your rules does it say because the green tick didn't form? Right? That's okay. I think that was yesterday. Maybe. So Safia, you've got to learn to trust, right? That's the biggest thing, guys. We've all done it. We've all gotten out of trades too soon, then watched it run. And we thought, oh man. And when you go back and you're calm and you look at it, you're like, oh wow, nothing changed. I should have stayed in this one forever. Gary, losing momentum, but cleared the area, pull back to support. You get in pretty late on that one, and you're able to make some money all the way up. Nice job, Gary. Late entry. Johan, ooh, that 13.2 is small. That's a lot of wasted space, Johan. I like it though. Odds favorable, no termination conditions. Coming from a termination condition, multiple divergences, everything says up. Absolute rock star entry and profits at the area. Guys, this is the trade. If this is the only trade that you focus on, I kid you not, guys. If this is the only trade that you focus on, it's almost impossible not to be successful. Your brain's going to tell you that you need more. Johan, I hope you don't mind. I'm going to steal your beautiful trade and put it into my spreadsheet, because that's everything that I look for in a high probability trend trade. I want to go back and study it this weekend. I want to make sure that I can do what you do, because what you did was textbook perfect. Nice job. Guys, I'm going to encourage you. Don't let me be the only one stealing. It is fair game once they post it in the room. Tony the Tiger. Look at that. Odds favorable. Didn't make the area. Perfect entry. Oh, and he got stopped out. And then you're looking for the next entry below. You missed it, but you didn't chase. That right there was your entry, huh? Tony, are you with me in the room? Can I change my verbiage? Because I thought you got in at the mid-band inside of favorable large triggers, but you didn't. You jumped in way above everything, right? So that 12-tick stop was so close to your area for entry, you got stopped out almost low tick. Right at those synthetic triggers. That's a great lesson. Rule number 3, had he been in at the mid-band, Tony, you would have been in that trade and paid, right? And maybe adding on at that mid-band. It's a good lesson. I like it. I love pullbacks, guys. You were crying? Yeah, I've had those tears. It's a great read. It's an awesome read with a little bit of challenge on that entry. And the right entry creates an awesome winnable trade. And look at this right here, Johan. This may help. Abdul gave us a great lesson on how he loves these HVA lines. Look at how on your 8 range, the high volume area lines up with the mid-band, lines up with the pull back to the large triggers with odds favorable momentum. Do you see that across the line? I love that look, and I'll almost anticipate it to get down to that area, and it typically does. Everything lined up across, and you just got in a little early. Just that little, man, I can't wait to be in a trade. All right, Safia from the other day, you said? Yeah. We all do sometimes, don't we? All right, Safia, are you with me? Cool. So let's go through it. Do you have odds favorable momentum? You put no. Small triggers above the large triggers. Large triggers are wide angled in the direction of the trend. Safia, did you do your checklist after the trade or before the trade? After? So you assumed that since it lost, that couldn't possibly be odds favorable, right? Am I right? I might be wrong. You said, well, this trade didn't work, so I'm going to say no on odds favorable. I'm going to say I broke rules. No termination conditions on the 13-2. You said no. There's absolutely nothing in the way. These are both yeses, Safia. You definitely have odds favorable momentum. You definitely have no termination conditions. And you had an area for entry inside of favorable large triggers, didn't you? Don't be sorry. Guys, this is why we post these, because Safia, when you lost this trade, you probably said, man, I screwed up. I can't believe I did it again. I broke my rules again. What am I doing? And you probably beat yourself up a little bit, didn't you? Yes. Can I show you what I see? And Safia, I don't know if you did this on purpose just to illustrate how important this classroom is and how important presenting. Safia did have odds favorable momentum. Safia did have no termination conditions. Safia did have an area for entry inside of favorable large triggers. Safia, how many divergences does it take to become a termination condition? It takes 3, right? You only had 2. Safia, that's the best entry that anyone could ever hope for on this trade. You want to know the truth, Safia? Is you took a high probability trend trade that didn't work. You took a high probability trend trade, a trade that typically wins 70 to 80% of the time, and you just had a cost of doing business. That's it. That's a beautiful trade. Safia, I would never miss this trade, not in a million years. And you know what, to be honest with you, I think I may have taken this trade and lost. I started my day yesterday with 2 trades that looked exactly like this and lost them both, Safia. But at the end of the day, why? Safia, in order for this to be 50-50, I would have needed Fibonacci resistance right there, dissecting. That's okay. So let's go back to the lesson, right? What's a 50-50? A 50-50 isn't your chances of winning. A 50-50 is nothing more. The only thing that has to happen to have a 50-50 is the small triggers break an area and the large triggers do not. That's your 50-50. It doesn't have anything to do with divergences. It doesn't have anything to do with the 5-1. It doesn't have anything to do with anything other than the location of the trigger lines. Yours was perfect. Safia, this is one of the most beautiful trades you can take. I think this is an amazing trade. I took this trade. I lost this trade. And I will lose this trade every time if it decides not to win because I'm not in control of the market. Your execution was perfect. So be honest with yourself. Just because it loses doesn't mean you made a mistake. Just means this one didn't work. What a great lesson. I love it. Good job. I'm glad you shared that one because you might have spent the rest of your life thinking you did something wrong. Luciano, 50-50, perfect entry, quick profits, profits again, make your money, get out. Luciano, what a great trade. Yuri, good morning. Nice to see you. Look at this. Everything says down, pull back to resistance inside of favorable large triggers. Yuri, way to capitalize. Beautiful trade. Earl, Everything says up with odds favorable momentum. You get in when the area is cleared. You get out when you get to trouble. Earl, beautiful trade. Pretty cool, right? That's not a high probability trend trade, but man, it's a good looking trade. Earl, great chart reading. Ed, let's see what happened. Ed, 50-50, right? Smalls below, larger not. Perfect entry. One loss of momentum, and it pushes up to that higher. I don't know if it continued from there. Let's see. Nope, it didn't. And then here, no momentum. Smalls against you. No areas inside of favorable large triggers. And you've already had a trend change on this one. Hoping that area holds, and it didn't. And again, Ed, you already had a reversal bar from the area that you were hoping would hold. You already had a signal here. There's no reason to give away 6 points. Hoping. You're too good at reading charts. Zeba. Okay, momentum. I like how you did that. Describe the momentum. It's okay. It's anything can happen, right, Zeba? Anything can happen. Notice that you have anything can happen here too. So no momentum, no momentum. And your area is not inside of favorable large triggers, is it? And what is this? But the green tick didn't form. You didn't get a reversal bar? Wouldn't your entry have been up here at the midband if it did? Focus on areas, not the bars. You're waiting for one specific bar to give you the pullback, and then you're looking for the areas inside of favorable large triggers. I think you had the right idea, but you gave up your advantage of momentum. Guys, remember, each rule provides an advantage, right? And in order to have that highest probability trade, we have to have all three. And yeah, Zeba, you let go of your momentum advantage. You said, you know what? I've got a clear path. I see a mid-band. It just didn't have enough behind it. That's okay. Let's see who's next. Gary. Guys, I love all these pictures. Keep them coming. Gary, it's a 50-50. It's close to. Perfect entry creates a manageable trade. Nice job, Gary. Can we use this as an example? It's just squeaking, right? But the smalls get above. Gary knows it's a medium probability. No divergence. I want you guys to look at Gary's entry. This is why I say focus on your entries, guys. Focus on your entries for the first 30 days. Focus on being so comfortable getting in at the correct spot that it becomes manageable. Gary made $90 on this profit target and got out break even. I love this trade. This is some of the best execution, and it all stems around that great entry. Guys, you have a recipe for the great entries, don't you? You have a checklist. Do you not have a checklist? Let me give it to you in the room. There you go. You have a checklist to give you the ability to find this entry. That entry makes things manageable. Tony, let's see what you did. Tony, you got caught in the vacuum a little bit there. Are you comfortable? You were unsure on the trade and you closed it. I don't think that was a bad idea. All right, guys, let's do a quick termination lesson. And Tony, this is going to help keep you out of trouble on this style for the rest of your life. Are you ready? So the gap theory. If price pulls away from those synthetic triggers too fast, too far, it typically snaps back to them. So Tony, what that means, and let me find the picture that looks like your trade. Price accelerates all the way into that mid band. Do you see how the large triggers are a full bar away, Tony? And if we look at your picture, see how those large triggers are still a full bar away? Mid band reached. Yeah, it takes a little bit to recognize it. Essentially what this means, let me go back to the pictures, is when those trigger lines don't follow, price is likely to snap and close that gap, which means that any shorts that you're taking, it's like fighting a vacuum. And you see it, whether it's a mid-band, whether it's Fibonacci, but this is a pattern that repeats itself an awful lot. And you can use that reversal bar marker to gauge whether or not the triggers are that full bar away. I have a lot of open stuff. So let's see if we can find one on the ES. There's a good example right there. Price accelerates all the way away, hits support. A lot of people go, hey, look, odds favorable momentum. I better go short. But that gap back to the large buys you a little bit of patience. It just keeps you saying, well, not yet. Not yet. I have to wait just a little bit. Price reaches the mid band, large triggers stay down, it snaps. Price reaches that area, large triggers don't follow, it snaps back. So you can scroll back over and over. Price reaches resistance, it's almost a full bar, it closes the gap to those large triggers. And what you can do is you can start getting just a little pattern recognition. And it's not necessarily putting you into a trade, but what it's doing is it's maybe keeping you out of a trade. We see it again here. We see it again here. So Thala, this is being recorded right now. I'm recording it on YouTube. John is going to make it available. It's private, and I'll figure out how to get you the link to it. Every day is recorded, so you can get it. I'll figure out how to get you that link. He's keeping them private. What he found is he's not ready to give away the cow. Keeping the milk from being free, I suppose. Does that make sense, Tony? Does that help a little bit? It's a great look. And if nothing else, it's going to help you avoid this short and say, let it close the gap and let's see what happens. I can't tell you how many times that look has saved my bacon. And it took me a long time to understand it. And I tried to find trades based on it. Oh, are you really? I didn't know that. Hey, NG. All right, who is this? Safia? $50.50, no divergence, pulls back. There's your entry, and it pushes up higher. Safia, I don't know that you didn't manage well. You had a window of opportunity. You put it up beyond the window of opportunity. It overran. It went all the way up to 59. It ticked all the way beyond all those areas. You could have waited for a reversal bar, kept it at 12 ticks initially, waited for the reversal bar. You're getting pretty far outside of that window, right? Yeah. Why did you move your targets to the other side of your entry? Just to get out? Did you go? No, because you went short. Your targets are below. So what you did is this hit your target, not your stop, which means what you may have done, Safia, is inadvertently clicked on your target. And when you came up here to move your stop and clicked again, it put your target on the other side of price, which pulled you out of the trade. Does that make sense? Because that's not a stop. Your target had to have been moved from down here and put to the other side. I think this was just an error. Just maybe happy clicking. Because it didn't hit your stop. Your stop looks like it was in place and you were fine. But I think you may have gone to move your targets. And instead of, let's blame jet lag. And guys, that'll happen. So when you have stops and targets, and this isn't a trade, please understand that. If I buy the market right here and I take my target and I accidentally put it to the other side of price, it pulls me out of that trade. If I take my stop and I accidentally put it to the other side of price, it takes me out of my trade. But see how this looks like, Safia? It was a stop loss, but it was really a target. I accidentally moved my target. I bet that's what happened. It looks like that's what happened. Because it was a solid trade. It was areas to hold. Yeah, that's okay. That was just a little mechanics. I would totally blame jet lag. Ed says, pure emotion insanity. Anything can happen. No areas inside. Divergences everywhere. Take a deep breath, Ed. You're good. 15 minutes timeout. Let the great setups begin. Termination condition. WTF. We trade funny? You're welcome, Safia. Guys, this is going to happen. If any of you believe that this isn't going to happen to you at some point during the day or during the week, you're mistaken. At some point during the day, you're going to be like, oh, I sure hope this goes down. And you're going to take the trade and you're going to get stopped out and you're going to say to yourself, holy smokes, what did I just do? And I think that this is one of the greatest things that you can do, guys. Get up, walk away, take a break, walk around, take a deep breath, get your facilities about you, and wait. And that's the hard part. It's hard to walk away when you make a mistake because you feel obligated to fix that mistake. So, Ed, we're not going to give you grief about the termination condition. We're going to give you praise for recognizing that it was just time for a break. Hey, Tony, price accelerates so far away. Those large triggers are a full bar back. Do you see it? That may be the trade that you took. If you tried to get in here on a momentum style, it ran you over right back to those synthetics. Yeah, it happens all the time. And I'm going to warn you guys now, you're going to go, hey, look, they're a full bar away. I'm going long. And you're going to get run over a lot. Don't fight momentum and direction, guys. Good stuff. Great class. Great pictures. Crude oil's trying to break through. S&P had no momentum, right? No momentum. Look at all these divergence in the same area. Everything said. Luciano, have a good one. Guys, I'm going to take a few minutes. I'm going to take a break. I'm going to refill my water. When we get back, the class is yours. If you have a question, ask it. If you have a picture, share it. You guys are going to run the class for the last hour. Your pictures are going to put us where we want to be. You're going to tell me what we're going to talk about, or I'm just going to sit here quietly and Skype my brother on the sidelines. I'll be back in about 5 minutes, guys. If your rules are met, take a trade, take a picture. If they're not, sit on your hands. Text your wife, text your husband, tell them you love them. Back in a few, guys. Thanks for that, Gary. Every now and then I leave the mic running. You guys had to listen to me eat a sugar-free popsicle. Sorry about that. That's my weakness in life. Sugar-free bomb pops. And I also do all the cooking here at the house. So I had to see what she wanted. Guys, we're watching the S&P. We lost momentum on the bottom. It pushed right up to resistance, right? Absolutely no trigger lines through that area. So we're just playing if then. If this breaks, we'll look for longs. If it holds and everything rolls, we'll look for shorts. All right, Tony, let's see what you did. Price doesn't quite make the one-to-ones. You took one short, get stopped out. It closes the gap back to the large triggers, as it does. And you were able to take advantage of that pattern already. That's some quick learning, isn't it? Target hit. Hits those divergence lines. You move your stop. It stops you out. Awesome. Tony, one thing that we can say about this one is that your stop, yours doesn't let me blow it up. And this is just a little management something. Can you guys hear me? Is everybody with me? Make sure I didn't remute it. Okay. Your stop is right at resistance inside of favorable large triggers, right? Do you see that? And you were stopped out with odds favorable momentum and no termination conditions. For me, if I'm anticipating this area to break, if everything's down, if it has the potential, and I'm looking to hold this for bigger targets, it's imperative that your stop is where the market shouldn't go. Which means that if you have odds favorable momentum and everything's cranking down, you don't want to put your stop at a potential entry, right? Because look what it did. Got you high tick, and then it started heading down. So the lesson that I got, and maybe this will help you, and let's see if, let's see if we can find a hypothetical example. And this is a good one. So Tony, let's say hypothetically, I'll take a picture so that I can mark it up. Oops, I just accidentally started my NinjaTrader 8. Let's say hypothetically all the rules are met and you get in at this area, right? And you're thinking to yourself, this thing is going to crank down and I'm going to hold this thing all the way to Fibonacci support because my 13.2 says that I have odds favorable, because my 13.2 says that everything is good. You get in, where the market is likely to continue. As it begins to break through this fib, make this bigger. A lot of people, I see this a lot. People go, man, I'm just going to put my stop right on the other side of this fib so I don't have to give it all back. Has anyone ever done that? And then it comes up, that one little spike, and then it runs. So if everything says down, doesn't it make sense that that pullback could be at the mid-band inside of favorable large triggers? And if that's the case, doesn't it make sense that your stop goes where the market shouldn't go? Everything comes back down again. Everything's still cranking down. And maybe we have a line on your 5-1, but your 13.2 is wide open. Your 13.2 is screaming at the downside, and you're saying to yourself, man, this is still going to go. I want to hold for that bigger move. Well, once again, my stop needs to go where the market shouldn't go. And guys, this is one of the hardest things for new user, is this right here, watching your P&L decrease creates bad decisions. And it creates arbitrary stop movement. I was talking to someone on Skype the other day, and I took a trade and I did just that. I was in at the perfect spot, and I said, well, it broke the areas and it got me high tick. And I was like, I was chumming the water. I was putting my stop where the market was likely to go, and they found me and they got me. And that was kind of the end of it for me. So if you're gonna hold, that stop has to go where the market shouldn't. Use pivots on the 5-1 for stop movement. And then the flip side of that, Tony, if you're in all the way up here and price gets all the way down here, is there any reason you can't take profits at that bounce point and just re-enter if the rules are met? One of the most satisfying things in the world is making money from here to there and then making money from here to there and kind of double dipping. Remember, guys, it's okay to get out and get back in. And you may not get the re-entry, but that one little bit, thinking about where the market is likely to go, where it's likely to continue, is going to help you a lot with management in the long run. Just getting those stops. It is, right? And Tony, I don't have the tolerance for it, and I don't know if that makes sense. I hate retracements. I'd rather take $200 on a trade, get out, and wait for the next one. Because if I do that 5 times a day, that's $1,000 a day. You know, that's $5,000 a week. That's a $20,000 month. Just take the money. And I think that this is one of the big problems, not problems, but challenges that people face. And I'm going to use Ron as an example again. Ron will get in right here. And Ron will get out right here. And he'll say, hey, this is my money. And if it keeps going, he'll get in right here. And if it keeps going, you know, he's out right here. And that I don't have to hit a home run mentality turns into my goal is to get paid, right? The only reason I'm day trading the markets is to get paid. You've hit target 1 3 times and given up 2 and 3 at stops? Yeah, it happens. So Tony, you got to go back and just look at it. How many times could you have made $200 or $300 and gotten out of a trade and then looked for a re-entry? And this is where everybody has a different tolerance. My brother loves big holds. His chart reading is so good that he'll hold for larger moves. And I'm sure that I frustrate him because my first target is always $100. My goal is always $100 on the first target because if I get it, I don't mind leaving $40 or $50 of risk over that reversal bar and getting stopped out on the perfect trade. I don't mind giving half of it back, but because I've got it in the bank, I'm good. So you'll come up with a plan that suits your tolerances. And he did, but you got to remember, you're not him, right? John Novak's not paying your bills. If you've been in the trader room, Siva holds for 30, 40, 50 ticks every trade. I can't do that. That doesn't suit me. I get heartburn and I get anxious and nervous. But what does happen is when I get in the perfect trade, see if I can find one from yesterday. That's not it. When I get in the perfect trade, when everything agrees, when everything says go, maybe that's... I take so many trades, it's tough. So here's one of mine, Tony. And I'm not saying that it's right, and I'm not saying that anybody's wrong, and everybody has a different... I got in at the pullback to resistance inside of favorable large triggers. And there's my profit targets. Predetermined. And it was the easiest $300 that I ever made. So my line of thinking is if I'm going to take the absolute highest probability trend trade, and I make $300, if I take 5 in a day and I win 3 of them, then I've probably made $600 or $700 on the day. And I'm telling you, if you make $600 or $700 a day on a 2 lot, what's it going to be on a 10 lot? What's it going to be on a 20 lot? What's it going to be on a 30 lot? If you watch Nexgen Ben in here, I think his biggest target is 10 ticks. But he does it on the highest probability trend trade possible, the highest probability trade ever. And he gets in, he makes his money, he gets out, and he makes his money through contracts, not through trades. Does that make sense? And I think people forget that a lot. That a $100 trade on a 1 lot is a $1,000 trade on a 10 lot is a $10,000 trade on a 100 lot, right? So Tony, if you hit your first target 3 times, look at how that grows exponentially. Whose trade was this? This was, why did I even ask? It's Ron. Oh, and he's calling it Thala's trade. Thala, did you see that? Ron has just renamed the Ron trade the Thala trade. Get in after trouble. Get out before trouble. I love it. Guys, everybody's different. That's what makes the world amazing. My risk tolerances may not be your risk tolerances. My profit targets may not be your profit targets. But the one thing that is consistent is that odds favorable momentum will always be odds favorable momentum, right? Termination conditions are termination conditions. We give you the highest probability entry so that you have something to work on, something to give you that sense of confidence and understanding and comfort. But you're going to build a plan that works for you, guys. You're going to build a plan that suits your risk tolerances, that suits your needs. Tony, you're going to play with stops for the next year, and you're probably going to change it 1,000 times. And you're going to change it in the middle of trades. You're going to change your plan mid-trade because of the conditions that are going on. And it's cool. But once you have that basic plan in place, once you have that, you know what, 90% of the time this is what I'm going to do because this is what my rules say, you'll find different ways to do it. Guys, we have a pivot from space, right? A pivot from the middle of nowhere, and a 50-50 at a mid-band and resistance and another level. 3 areas that haven't broken on a 50-50. Let's talk about pattern recognition. Tony, large triggers are all the way down by the gap. D, great job. This is a look, and it's not guaranteed when it doesn't come from an area, hits that mid-band, hits that resistance on a 50-50. It loves to continue down to that next key area. And D, you're absolutely right. Those large triggers all the way down at the reversal bar marker. Let's see if price closes it. If you took the long, you got run over right here, right? Dag nabbit. It's not a short, but it's a don't take that long. So let's just watch it, see how it plays out. Might do it, it might not. We're not in control of that. What we are in control of is whether or not we pull the trigger when our rules are met or they're not. But does that make sense, guys? This is a pivot that comes from nowhere. It's not coming from fibs anywhere. Because it's not coming from anywhere, it may just go down. And the large chart midband is a half mile from the large triggers. That is a danger, Will Robinson. Here's a picture that John Novak made forever ago. Lack of divergence, lack of areas creates a bad high. In this case, a bad bottom. 50-50 look is defined when the large triggers are down below, but the smaller below, the larger not. 5-1 chart divergence typically resumes the trend. This one may dance for a minute before it does it, but you can create recognition through patterns, guys. You can create expectations based on things that repeat themselves over and over and over. What do you guys want to talk about? Is the S&P doing anything? Termination creates a full reversal, right? Straight into it. Tony, there it is again. D, do you see it? Look at that gap back to the large triggers. Not getting in at that mid band. Should we take a picture of it? Are you guys taking pictures of these? An arrow. Mid-band hit. Large below reversal bar marker. Gap theory, no longs in the vacuum. The reality is you guys are going to watch longs work every now and then in the vacuum, and it's going to make you want to break your rules. I like to come in here and go to chart reading things and take that exact same picture. Oops, I have to upload it. Share it to screencast. So guys, if this is a new concept to you, take that picture, get your screencast link, and drop it in under chart reading. Call it gap theory. Or if you want, put it in termination conditions. And call it mid-band term. Just curious, who has a copy of my spreadsheet? 130 pictures of high probability, 130 pictures with 50-50s in there. Does everybody have this? Here it is again. Guys, do me a favor this weekend. Click on every link. Lenny, I just put it in the room right above you. Do you see it? You're welcome. Just for grins, guys, click on the links. I think what you're going to find that is if you look at the perfect entry, and guys, that's what these are. These are perfect entries. They're not even all winners. Watch this. Gary's perfect high probability trend trade didn't work. But it's entries. I want you to focus on your entries this weekend. I want you to focus on getting the best of the best entries. And then what you're going to find is that then you can start to manage them. Then you can start to break them apart a little bit and determine what works for you, what doesn't work for you, what you're comfortable with, what you're not comfortable with. Look at that, guys. Close the gap right to it, didn't it? Absolutely, Safia. Just take a picture, write your question. Holy smokes, it closed the gap to this one too. Absolutely. Take your pictures, ask your questions. Guys, I love it. The more questions you ask, the better we all get. The better you get. Don't even worry about anybody else. Be selfish. And guys, sometimes in the heat of the day, maybe I missed something. I'd love for you to go through those pictures with the sole purpose of telling me that I messed up, and you will be hypercritical. You will really do a great job of analyzing. We've got a little time. It's Friday. What do you guys want to talk about? Does everybody have this? This is for you new people. We're going to set you up for the weekend, for you people being consistent. Has everybody written a plan? And it's okay if you haven't. Who has not written a plan? Who hasn't put on a piece of paper what it takes to get them into the market? Or on a Word document? There's a gentleman that's been with Nexgen like 17 years, and he told me a year and a half ago, he said, if you don't have a plan written down, you don't have a plan. It's too easy for you to interject your opinion. Awesome, Zeba. Or Zeba, just do market replay. And instead of watching videos, practice it. Hit pause and move your stops and take a picture. And then let it play out. And then when a stop is hit or a target is hit, hit pause and write on it. And create a collection of management videos. But keep it simple initially. You'll learn how to hold bigger. You'll learn how to get out sooner. You'll learn how to move appropriately. But keep it basic at first. Guys, write a plan for your entries. These are my entries. This has to happen. Take pictures of your entries. I just gave you 130 examples of entries. Keep it simple on your management initially. Don't try to be a hero. Don't hit home runs. You're still in Little League. And if you let this be your path, guys, this simple example trading plan, I got you. So let me see if I can simplify it. The concept of management, Zeba, is to always have calculated risk, right? No, that's okay. The idea, and let this be your basis. The idea of management is to have calculated risk. To not get into a trade and hope, to never hope. To always say, I'm going to do things for a reason. And that's all management is management is, I'm doing this because. I'm putting my initial stop up here because this is where the market shouldn't go. I'm putting my targets here because I don't have the repetitions yet to know when it's appropriate to hold longer. Is that a pretty good premise? Like just a basic? So that's the first concept of management is protective stops. And then because of the window of opportunity, you can identify where that protective stop should be. Does that make sense? And then we're talking about keeping on that same theory of appropriate risk, because risk is a reality. When the trade begins to move in the direction, appropriate risk is a tick or two behind that reversal bar. Because not only has the market already returned to the area where it's likely to continue, it has begun the journey in the direction of the overall trend. So this stop placement, it's appropriate, right? It's pragmatic. It makes sense. And that's all management is as a trader, is doing things pragmatically, doing things because statistically, this isn't likely to get hit if the trade's going to be a winner. Your profit targets are what's really going to change. So Zeba, if you can focus on a great initial stop, take a picture, stop movement after the reversal bar, the targets are irrelevant. And then you have to say to yourself, well, when you're in the trade and it's time to manage, go back to this picture. you can use that small chart to manage. So let's take a picture of this one, Zeba, and let's talk about a little management approach. So watch this. There's your entry, right? You're great at that entry. Your stop initially is where the market shouldn't go, outside. Does that make sense? Because if this price, whoops, it keeps giving me stops. Because if this price goes up and beyond that window of opportunity, we want something in place. We want something in place to get us out of that trade. Okay. I love it. This is the beauty of this class. Zeba, you are using it beautifully. So what we'll do is we'll go through kind of the what it means. So what's your window of opportunity? And I love the language on this. The window of opportunity is where the market is likely to continue. Does that make sense, Siva? From this point to this point, this is where it's likely to continue, right? So if you let that be the premise, if that's where it's likely to continue, it's not likely to continue from down here. At this point, Ziba, below the window of opportunity, hasn't it already exceeded the spot that gives you a statistical advantage? Does that make sense? I'm trying to say it different than I usually do. So your initial stop is beyond that statistical advantage. Your initial stop is beyond the most likely spot for a bounce, because if it comes all the way down here, then I no longer have that advantage, and I'm willing to jump ship and get out of there and take my loss. Does that make sense? Thinking about it from the terms of the window of opportunity where it's likely to continue. Awesome. I love it when you guys make me say it different, because you make me a better teacher. So then, Ziba, the next step is now the market, with the advantage of momentum, with the advantage of no termination conditions, has begun to move in the direction of the overall trend. Because remember, the 13.2 says up. The 13.2 has a clear path. So now this trade's starting to do what it's supposed to do. Does that make sense, Ziba? So now that it's already continuing from the area, and I get this reversal bar, now I can put my stop below the reversal bar because it's already done what I expect it to do. So for me, it's already continued from the area where it's likely to continue from, which means that all my rules are met. I'm in the trade. It is going. So I'm going to put my risk below the reversal bar. It's already done everything that I hoped that it would do. So I get to reduce my risk behind that reversal bar that says that it's now moving in the direction of the trend. And these are the two that you really need to work on. Outside of the window of opportunity, because we don't want it to go there, and if it does, we want to be out of the trade. And then it did everything I expected it to do, so I'm going to reduce my risk and see if it finishes the move. Safia, it depends on whether it's a long or a short. If it's a long, I'm a tick or two above the area of support inside of favorable large triggers. If it's a short trade, I'm a tick or two below the area inside of favorable large triggers. Safia, do you want to do an example of it? You have your capture software, right? And Ziba? So guys, take a picture of my picture. Let me know when you have it. And this is for everybody. What a great way to practice. Take a picture of my picture. And when you get the picture, and I'll take one too. Do you guys have your picture? Ziba, do you have it? And guys, this is for everybody, not just Ziba and Safia. Just because they look like sisters from different misters. So once you have that picture, I love this. This is fun for me. Cool. Jar Jar, you got it? Can I go to mine now, guys? Yes? All right, so let's annotate together, guys. We have the picture. This is what I want you to do. I want you to take an arrow if you're on capture. You can grab the stop sign. And let's do this. I want you to point where inside of that window of opportunity would your limit order go? Okay? And I want you to point to it. I'm not going to give you the answer. Then I want you to take a second arrow, and I want you to point to where your initial stop would be. And then I want you to take a third arrow, and I want you to point to where your stop would be when it begins to move in the direction of the trade. And guys, I think just rolling through this idea is going to be helpful for you. Where does it need to go initially? Where does it go once it begins to move? Where am I getting into the market? And what you'll see is the relationship that they all have with one another. And guys, post your pictures when you get them. We'll stay late today if we need to. This is fun. Gary, waiting for those termination conditions to break. Amen. Andy Trader, nice to see you in here. Let's take a look. Odds favorable. You're trading into that termination. No divergence, so you take a shot. Get paid on the way up. Divergence prints. Take an exit. Andy, nice job. You're taking a chance on that termination condition, right? Because of a different time frame that says that's just a bounce. Perfect entries, guys. Create manageable trades. Wasn't even 50-50, Andy. It was dead to rights termination condition. So, Andy, 50-50 trade? A 50-50 trade has nothing to do with the relationship of the trigger lines to one another. It has everything to do with their relationship to the area that you're anticipating to break. No triggers through. There's no clear path. It's a termination condition. This is what you had. If the smalls break through with odds favorable momentum, it has the potential to break. This is your 50-50. It's not the small triggers on top of the large. It's the small triggers through the area, and the large triggers haven't broken it. So what you had was price reaches resistance. Every trigger line is below that area. This area may reverse the market. And it ultimately pushed it back far. You were able to get that lucky bounce. You may have. Can I give you the easiest video ever? Ziva, Jar Jar, Paul M, Safia, do you have those entries and exits for me? It's okay if they're wrong. Would it make you feel better if I did mine first? And then you can adjust yours so I don't think that you're new. All right, Andy. And this is not just Andy, guys. Watch this weekend. This is a 5.5-minute video that John Novak put together. Andy talking about that relationship of the trigger lines to the areas for termination conditions. It's very helpful. Ziba, let's see what you did. Whoop. You have no more ideas? Okay. Entry is perfect, right? And guys, I gave you a loser on purpose. So a stop is where the market shouldn't go. And a target is where you want it to go. Does that make sense? Ziba, a stop is protection. A target is the goal. So where would your stop be? Where would your protection be? I like it. So let me pull up my picture and let me show you what I think. I'm going to use the stop. My initial stop, Ziba, outside of the window of opportunity, beyond those large triggers. Does that make sense? You nailed your entry. I knew that you would. My entry is just below. My initial stop is outside of the window of opportunity. And then Ziba, this is the one that's going to save you from a lot of those losers. Once the reversal bar prints, my stop goes lower. It's a short trade. Yep. And it lost, didn't it? No worries. But you see how everything is down? Sorry, I should have said that. That's a short. So if your initial stop was here and the market goes down, your next stop is right here. Do you see how that turns into a tiny loser instead of a big loser? No, Ziba, it's just that new topic. You know plenty. You're on that second bite of the elephant right now. Your entries are spectacular. All right. Sophia. There's your entry. Stop above the reversal bar. Couple targets. Those are some tiny little targets. You guys are saying, oh, I totally would have got out and made all the money. No, you wouldn't. You would have been run over and your stop would have been hit. Your first target might have been hit. Ron, enjoy your weekend. Tony, there's your entry. That's okay. We're going to sell at resistance inside of favorable large triggers. Tony's targets where the market shouldn't go. And guys, do you see how, and this is great though. This is great because it's having you focus on where the market shouldn't go. If I took this trade right here, hypothetically, if I took this pullback to the area of support inside of favorable large triggers, my initial stop is right here. That's pretty small, isn't it? Once I get a reversal bar, I reduce my risk. And now it's just a matter of targets. Let's see if there's another example. You know there will be. That market got a little choppy for a while. Maybe there was a short. Nope. Maybe there was a long. All right, 1046. Let's see if we have an example here at 1046. Absolutely, Andy. Where the market shouldn't go, right? Where the market shouldn't go. All right, guys, let's do it again. Check it out. There's my entry, right? Right below the area of resistance inside of favorable large triggers. The initial stop, like Andy said, is outside where the market shouldn't go. If this market keeps railing up, I don't want to be in that trade. And then once it reduces, once it goes down, and that's it. So when those trigger lines are one on top of the other, guys, when your market is so concise, look at this. Look at how little risk Gary had on this trade once it gets going. And do you notice how these are the only areas inside of favorable large triggers? This is where it should continue from. You may put 12 ticks on it initially, but you're down to 3 or 4 ticks of risk once this market begins to move. Great entries create manageable trades. And like Andy said, the better your triggers are, stacked one on top of the other, the more concise your window of opportunity is, the less risk you're going to have on a trade. Does that make sense? Guys, it's easy to talk about it, right? And isn't this cool? There was no reason to move the stop again until it hit the target. It's easy to talk about it, but you've got to practice it. Use that market replay. Started to click. Ziba, you're going to be teaching this class in 6 months. Did you, Gary? You'd be surprised. I was talking to someone one day, and I told him, I was like, you know that you're reading as well, and you could teach this class. Watch this. Are you ready? Sophia, this is one of yours. How easy is it with absolutely nothing moving to recognize momentum, to recognize that it's a 50-50, to recognize your perfect entry, and to take those profits? Guys, it's pretty easy, isn't it? Nothing's moving, right? Nothing's moving. There's no emotional attachment. Guys, when I look at your charts, I'm not anxious or nervous. I'm not hoping that it wins. I'm not afraid of being stopped out. Does that make sense? I'm looking at your chart 100% objectively with absolutely no emotional attachment to the trade. Salvia, does this picture make you nervous? Does this picture make you anxious? Does this picture fill you with hope and dread? This is your trade. How did it feel in the moment? Were you nervous in the moment? Were you anxious in the moment? Were you hopeful in the moment? I guarantee you were. You were relaxed? Nice. You should be. What a beautiful trade. But guys, in the beginning, even the best trade is going to stress you out because you're unsure. Awesome. Ziba, have an amazing weekend. We'll see you on Monday. Bring all those questions. But what you're going to find, guys, is if you go through this spreadsheet, and remember, I gave you mine with like 130. Go through this spreadsheet. I'm going to give it to you again in the classroom. Go through it. Look at the pictures with no emotional attachment. Look at the pictures with no adrenaline. Look at the pictures without giving a flip about what the result is. And all you're doing is burning that best image into your brain so that when it sets up in the live market, you don't have to ask yourself if it's the right trade or not. You know that it is. You know that it's rules met. Thala, let's see what you did. Guys, sometimes you just aggravate me. I'm not going to lie. Sometimes I get a little put out with you guys. Because you walk into my classroom, and after 3 days, you identify odds favorable. And you identify no termination conditions, and you rock star entry at an area of support inside of favorable large triggers. Thala, you get the gold star. Safia, if you have odds favorable momentum to the upside, let's look at your 13-2. Are you ready to keep it easy, Safia? What color's the background on the 13.2? You should only buy, right? If you're taking a high probability trend trade. Safia, what color's the background here? How easy is that? Do you know what it means if you get confused? It means that your rules aren't met and you're trying to predict the direction. Let's see if we can find a choppy spot. Right here's a good example. Background's green, right? Enjoy the weather. Andy, I live in the Pacific Northwest. That's just hurtful. But isn't that amazing? You've got odds favorable, but you have a termination condition. But you know that the only direction that you should be trading is up. You've got odds favorable, and it's a 50-50. The only direction is up. You've got odds favorable, but it's a termination condition. The only direction is up. Because the only way that you can have odds favorable momentum is with the smalls below the large. And when the smalls break below the large, the trend tells you which direction you should be trading. So Safia, if you have, and I like the question. Let me show you a picture that I have. And this, I think, will be helpful. You guys don't know this, but I literally take pictures on my days off in the morning before class that I think will be helpful for you. So check this out, Safia. Everything says down, red, anything can happen. The rules aren't met, no trade. Everything says up, green, odds favorable, the market continues. Anything can happen, it reverses. And then here's yours, right? The larger down, the smaller up. The smaller up, the larger down. Do you see this point right here where there's no agreement? This is what you're talking about, isn't it? How do I know whether to go long or short when they don't agree? What's the answer, Safia? If rule number 1 isn't met, which direction should you go? Not your trade. It's crazy though, because this is where new users get absolutely chewed up. Because they haven't taken a trade for 20 minutes, right? They don't see a clear path. They don't have odds favorable momentum. And they're like, well, the background's green, I think it's going up, but my triggers don't say it. The background's red, I think it's going down, but my triggers don't say it. And if you just sit on your hands and wait for everything to agree, then you never have to guess in a choppy market. If it's always rules met, rules not met, then you don't have to make those decisions. Guys, support is reached. Absolutely no trigger lines have broken through. Large triggers are above the reversal bar marker. You're welcome. That's a great question because that's common. If you keep it simple, rules met, rules not met, you'll be amazed at how many problematic things you can keep yourself out of. Price reaches support, absolutely no trigger lines have broken through. Pretty amazing, right? I know that I have to let this area break to take a short trade. Large triggers are above the reversal bar marker. I can say without hesitation that because of pattern recognition, there is the potential for this price to pull all the way up to those large triggers, which means that I'm not going to get romanced into a short trade just yet. And it means that I may miss a trade. It means that it may go without me. I don't miss a trade, but I miss some movement. But it's okay, right? Because my rules give me an advantage. And that's what we do every day. Guys, it has been a phenomenal week. Thank you so much for all the participation. Quickly, to those of you that are on demo, To you guys that are new, that are focusing on your plans, that are trying to get to where you want to be, cordially invite you. If you're having a challenge, if you're not seeing something, if you are still a little shy about posting in class, but you want some clarification on something, please email me. Reach out, give me that opportunity to clear it up for you. What we do here, I try and keep in its simplest forms. We try and create a foundation. It takes a little bit of work on your part. I'll give you all the tools that you need, but the more you participate, the easier it becomes. I hope that that's evident for you guys. The more you post charts, the more you ask questions, the quicker you get to where you want to be. Do some study on the weekend, circle some tails, look for some trades, embrace some advantages. And guys, we're going to come back next week and we're just going to do it again. And again and again and again and again. And we're going to repeat this process until you guys are so sick of me that you leave this classroom and you say, I'm done with them. I just don't need them anymore. Thanks, Tony. I appreciate that. Guys, when I was a personal trainer, my proudest moment was when I got fired, because it meant that my clients are able to do it on their own. I want everyone in this room to fire me eventually. I want you to come back and say hello, but I want you to send me a text at some point or a Skype or an email and say, hey, Mark, you know what? I mute the room now because I'm so cool with my looks that I'm willing to take that I just don't need you anymore. No, stay as long as you want. I miss you guys when you leave, and I notice when you leave, and it makes me happy when you leave, as long as I know that you're still trading. So check in every now and then. Let me know. Guys, great week. Thank you so much for being here. Thanks for the great questions. We'll do it again next week, and we'll just keep getting a little bit closer, guys. Take care. I'll see you on Monday. I've got my in-laws in town. I'm going to go entertain some people. We'll see you guys soon. Be good.